What's going on, guys? Welcome back to another video. Thanks for tuning into Stock Essentials. My name is Alex, and today we're going to be going over 3 penny stocks that you should be watching and having on your radar because they're going to be pretty volatile, and we're going to be going over these stocks right here. So if we take a look at the penny stocks chatter, which is the Reddit subreddit penny RSS penny stocks, the top 3 stocks on our list are going to be sprt, atos, and xela. So starting off with sprt, this is going to be the ticker symbol for the company support.com, and they offer a lot of cloud solutions, customer and technical support solutions for a lot of different companies, which is pretty good. So they do a lot of stuff with tech support, malware removal, and all sorts of stuff like that. So this stock is actually the target of a short squeeze. A lot of hedge funds are actually shorting this stock, which is why it's been pretty volatile in this past few months. We saw a nice little squeeze back in March, and then that early in late July, it's actually been having this nice little squeeze from around $4 a share all the way up to highs of almost $9 per share. And now it's having a little bit of a pullback. As with most squeezes, you're going to have a really fast rise, and as fast as a stock can rise, it can also drop just as fast. So you always have to keep that in mind when trading very volatile stocks such as this one. But overall, in the long term, I do think this is a pretty interesting company. It's obviously a very small one. A lot of companies do end up using their solutions, but overall, it's a target in a short squeeze right now. A lot of hedge funds are shorting the stock, betting against it, and the retail investors are picking it up. They're thinking, hey, this stock can go from $4 all the way to, say, $10 a share, $20 a share, which it actually did. It hit around $9 per share late July. So a lot of people are looking at the stock. It's pretty volatile, and I know a lot of people are trying to see whether it's a buy or hold. Overall, it's pretty risky, but it is one of the stocks you should keep on your list. So the next stock is going to be atos, Atos Therapeutics, and this is a stock that has dipped quite a bit in the past week, all the way from $4 a share. Now it's sitting at around $3 per share, which is about a negative 25% drop. Pretty significant. A lot of people who are holding this stock are pretty upset. And the reason why it dropped was because they actually issued some more stock offerings just to raise capital and get themselves out of debt. Now, this is a biotech company. They operate as a clinical stage pharmaceutical company focusing on the development of novel therapeutics and delivery methods for the treatment of breast cancer and other breast conditions. So it's definitely a much needed company, much needed treatments for all these diseases. But overall, it's had a very volatile lifespan. It is a target of shorts for the hedge funds, but in the short term, it is losing a lot of value, especially with that stock offering to raise capital. But overall, if you're planning on getting into the stock, now is a pretty nice dip. As we can see, it's held up pretty well around this $3 price point support. So if you want to get into the stock, I would highly recommend buying shares. Playing options is pretty risky, and since it's a penny stock, it's not going to cost you that much money. And these penny stocks are really good for people with small accounts just because they don't require that much capital. And if they do end up playing right, you can triple, double, or even quadruple your returns because penny stocks are going to be pretty volatile. But you have to be pretty careful because as fast as they can shoot up, they can also tank just as fast. So that's Atos Therapeutics. The last stock is going to be XLA Technologies, and they are also a technology company. They work on providing digital solutions, digital transformation solutions. So this is also a target of heavily shorted stock for the hedge funds, and a lot of people are picking up this stock. Lots of volume that's going on. As we can see, volume is around 78 million, where the average is only 53 million. So a lot of people are buying into it, and we can see previously on the day, really nice uptrend, very stable. We can see some pullbacks obviously throughout the day, which is very healthy price action to justify this plus 13% on the day, which is only 38 cents. But you have to look at the percentages because this is a penny stock. It is only $3 a share, and if you are bullish on it, now is a pretty nice time to get into it. Really trending in the market right now. So take a look at the 5-year. It started out around $10 per share through a SPAC merger, and then overall it's declined in price. So if you're long-term bullish on the stock, buying and holding shares of this company could pay off big in the long term. But obviously penny stocks are going to be pretty risky. But these are the 3 most volatile and most talked about stocks. Penny stock specifically going on in the market, as we can see with the weekly chatter. Lots of mentions for these stocks, and these should be on your radar if you are into penny stocks. So with penny stocks, it's highly recommended to just play shares. Buying options is pretty risky. If you take a look at the options chain, the premiums are kind of reasonable. Implied volatility is obviously going to be very high, so the premiums are going to be high as well. If you want to play it safer, you could sell some cash secured puts. It's always tried and true strategy. And as we can see here, if we wanted to say buy 100 shares at the $6.10 price, $6.10 price, we could sell a $6 cash secured put expiring August 20th, which is 2 to 3 weeks from now, and you will save $100 of premium for selling it. Our break even is going to be at $5, so if sprt.com stock stays above $5 per share, we're going to be making profit on this trade, and it's a high chance of profit, really good probability, and overall it's just safer to sell cash secured puts on this stock or any of these penny stocks if you're planning on just buying and holding shares. So that's one way to take advantage of the increased volatility, because remember, the higher the implied volatility, that means that the premiums for these options are going to be higher as well. And selling options is going to be a really good way to capitalize on the higher inflated premiums. So if you want to be a bit safer, you could also sell, say, a $5 cash secured put, and the break even is going to be even lower. It's going to be $4.52 per share. You could even go even lower, maybe a $4 cash secured put. Your break even is going to be under $4. So you can see where we're heading with this. And overall, if you just want to sell options, that would be a really good way. Buying options is pretty risky, but of course, playing penny stocks is going to be risky in general. So that's about it for this video. If it helped in any way, please leave a like, comment down below what your thoughts are on these penny stocks, and of course subscribe if you're new to the channel. It helps out a lot. Thanks for watching.